In this video, I'm going to quickly talk about the relationship between interest rates and crypto prices, as we've been seeing interest rate hikes in Canada along with a 1% hike just last week. What I'm going to talk about in this video is a really simplified and generic version of the relationship between the two. So if you didn't already know, central banks are one of the drivers behind the wheel of an economy, the other driver being the government. The central bank's job is essentially to keep unemployment low and inflation relatively low, like 1 to 2%. So they do this primarily by controlling the money supply and adjusting interest rates. When inflation goes above their target range, which is what we've been seeing all this year, this requires a combination of money supply tightening, which is taking money out of the economy, and an increase in interest rates. As this video is about the relationship between interest rates and prices, that's what I'll be focusing on in this video. By increasing interest rates, it does two things. It encourages saving because you can now earn more on your money in theory, and discourages borrowing or spending by making it more expensive to borrow. Interest rates are a key factor in how cheap or expensive it is to borrow money, and so this should effectively drive down demand of goods and also prices. In other words, to combat inflation. Borrowing money at 1% is cheaper than borrowing money at 5%, obviously. So on a $100 loan, that's a $4 difference per year, which isn't much over the course of a year. However, when we look at larger sums of money, like $1 million plus, that's a difference of $40,000 per year. Now, this is where the sell pressure begins. When it becomes more expensive to borrow, people are more reluctant to buy big ticket items such as a home, car, appliances, and etc., while lenders, like banks, are also more reluctant to lend that money out because they're worried they're not going to get that money back. In addition, people who already have outstanding debt, like a mortgage with a variable rate, are forced to pay more in interest, and thus they have less money for other stuff. So when people don't spend money, this means that businesses earn less money, and when businesses earn less money, they start laying people off, which is kind of what you've been seeing with the different crypto companies. They weren't making money, and so they had to let people go. That said, when people start feeling the financial pinch on their money, they start cutting unnecessary spending and may even start selling their assets to cover expenses. Crypto's an asset class just like stocks and bonds, but obviously significantly riskier. That said, in times of financial turbulence, most people are always going to sell the riskiest and most liquid assets first to pay for living expenses or to buff up that emergency fund. This means that low cap coins to then higher cap coins are sold off. Selling, even at a loss to survive to pay for living expenses, will take precedence over having assets that don't provide any present utility to one's survival. People would rather take a loss on their investment than get kicked out of their home or starve. This is why you've been seeing crypto take a nosedive in price. People sold off in anticipation that the coin's prices will continue to go lower because of the forecasted aggressive interest rate increases. The sell-off affects primarily people who are overexposed or over-leveraged in it first. This then causes a cascade effect on a sell-off where everyone needs to get out before it's quote-unquote too late or gets liquidated. This is when collateral is taken and sold off to pay for one's debt. This is actually what has happened with Celsius. They halted withdrawals to keep their liquidation price levels lower, along with other things. When liquidations occur, this pretty much increases the selling pressure until those who can't handle seeing the losses on their assets also capitulate. This then becomes a vicious cycle up to a certain point. Now, just as a side note, if you take a look at the Wall Street cheat sheet on market psychology, this is exactly what we're seeing right now. I personally think that we're over here, where we're in the anxiety and denial stage. I don't think we've seen that capitulation just yet, and I suspect it'll come soon. This is when you'll see a massive flush out of people in the crypto space, and everyone's quiet about crypto. There's no interest in it, and in fact, there's actually a lot of anger towards it. Now, as time passes on, people will recover from their financial situation, and as they've got more money, they'll put that money into investments, and so you should see the asset prices go up as well as crypto. crypto. So that's pretty much how interest rates affect crypto. Now, what I suspect is that crypto prices will only go back up once inflation's been tamed. After we see a cool off in inflation and it's back to the central bank's target rate, that's when we'll start seeing people be a little bit more risk on with their financial assets. As to when that's going to happen, I honestly suspect it'll take at least a year for inflation to kind of get back to that target rate that the central bank has. Who knows? I could very well be wrong, but we'll see.